The RBI's Monetary Policy Committee has begun its three-day meet today to decide on the next course of policy action. Let's do a three-point analysis to find out what factors will weigh on RBI's decision this time, and are we looking at another round of rate cuts? 1. The crisis response. The central bank has been taking steps proactively to limit the damage to the economy caused by the COVID-19 pandemic and the subsequent lockdowns as well. Now, the deteriorating outlook for growth even necessitated off-cycle meetings in March and then in May again. 2020. Now, in March meeting, the MPC had slashed the repo rate by say 75 basis points, bringing it down to 4.4%. The June meeting was again advanced to May 20th in view of the COVID-19 pandemic, and at this off-cycle meeting as well, the MPC decided to bring down the repo rate by another 40 basis points to 4%, while maintaining its accommodative stance. So basically, the central bank has already slashed policy rates by a good 115 basis points this year alone. Now, the RBI governor has indicated in the past as well that the MPC will do all it can and all it will that's needed to support the economy amid the crisis. Experts have, however, pointed out that despite the rate cuts by the RBI, the demand situation or growth has not improved substantially, as there is still uncertainty about when will things really normalize. 2. Inflation versus growth. Well, the macro data shows so far that while growth has nosedived, inflation has picked up. Headline consumer price inflation crossed the MPC's threshold ceiling of 6% back in June 2020, which is well above the RBI's 4% inflation target. By and large, one could say the rise was due to the COVID-19-led supply shocks. Now, the question the MPC will be debating is whether the pickup in inflation is transitory or if it has the potential to really become generalized in the future course. And therefore, this time the MPC really finds itself torn between the need to either rein in the retail inflation or prioritize growth. 3. Will RBI cut rate again? Well, some of the experts believe that the economy really needs hand-holding at this time, and so the accommodative stance is what the RBI is likely to stick to even in the current policy. Now, in other measures, banks and financial institutions may also be now allowed to provide a one-time window for restructuring of all the term loans so that the companies can actually come back on stream. Now, as for the rates are concerned, since the data on inflation leaves room for clarity, the MPC may decide to wait and watch and take a pause before resuming the rate cut in the next policy. Lakshmi Iyer, Chief Investment Officer at Kotak Mahindra Asset Management Company, in fact, has said that a dovish pause may actually bode well for markets, as well as the comfortable liquidity could mean stability on bond yields as well, notwithstanding the small volatilities along the way.